We had to keep our head on a swivel with that.
You do.
Yeah. And it was funny, very rarely in our industry when the appraisal comes in low, very rarely does the buyer.
Let me stop you right there. The worst thing you can do is tell an appraiser that his appraisal came in low.
Low. Yep.
That's the easiest way to start off a conversation poorly.
It is.
It's less than the contract price because in the appraiser's mind, the appraisal is perfect. Mm-hmm. Okay? So less than the contract price, 5 words.
I knew that. I knew
did.
better. I knew better.
You've heard me say it before.
I knew it better. I knew better. You're right.
All right.
This is your opportunity to really grill me. You can grill me right now.
There you go. Continue on. Let's talk about the ROV process.
Listeners, episode 7, season 2. I have Pierce Blitch, appraiser in the local CSRA market for 44 years, the owner and operator of Blitch Appraisals, involved at the local, state, and national level, including the Property Valuation Committee at NAR. This is going to be a really good one. If you have some questions about how the appraisal process works, this is going to be your episode. We're talking all sorts of facts, theories, and process, what to do, what not to do. It's going to be an exciting one. As always, thanks for listening. There's this thing called a Four Loko. And the Four Loko was like probably like 2 shots of espresso. The caffeine comparable, not actually 2 shots of espresso, but boatload of caffeine. And then, it was like the equivalent of like a bottle of wine, this thing like this, and you would drink one of them, and then you would just go out afterwards.
No.
They tasted like you would think, just terrible.
All we had was Red Bull.
Red Bull, yeah.
Red Bull was coming right on the scene when I graduated from college, back in the dark ages.
Red Bull vodka.
Yeah.
And then you had the espresso martini. That's just the adult version, of the Four Loko, in my opinion.
Why would you want to run good vodka?
Espresso martinis are delicious.
I trust you.
They're too good. You ever had an espresso martini?
No.
We're gonna have to turn this into a cocktail podcast. We got espresso martinis. You have vodka in here. Y'all have vodka in the studio. Oh man, good to know.
I've got a bottle of bourbon and a bottle of scotch in my side dish drawer.
And it is 10 o'clock.
No.
Hey, let's do it.
That's usually about 6:30.
We're gonna roll right into this. Listeners, Grant, what episode is this?
7.
Episode 7, season 2, appraisals is the topic today, and we have thought of no one better than Pierce Blitch, been in the appraisal business for 44 years. Blitch Appraisal, you may know a thing or two. I would assume so. How you doing, Pierce?
You would hope so.
I would hope so. Pierce, tell everybody who you are, what you do, everything about you.
Well, I'm a native Augustan. Went to Richmond Academy, graduated from the University of Georgia. Not quite on time. Went 2 extra quarters back then.
That's all right.
Got out, started selling real estate in 1978. Started doing appraisals in 79, trying to break into the appraisal profession. Started pretty much full-time appraisals in 1980. Continued to sell real estate a little bit until 83. Sold my last house in June of 83. Moved into our current location on Wheeler Executive Center in December of 85 and have been there ever since.
Wow. So office on Wheeler Road, and just something told when you looked at that property, did you say, this is going to appraise good?
I didn't know it was going to appraise good, but I knew it was in a great central location between Richmond and Columbia County and Burke County and North Augusta, and it still is.
Okay. And what do you like most about the appraisal industry? What's kept you in it for so long?
There's always something new every day.
Okay.
I see a new piece of property, a new house, and I'm not office bound all day long. Mm-hmm. About 1/3 to 40% of my time is spent in the field and the rest in the office.
Okay. And do you cover just residential? Do you do commercial land?
I used to do farmland and timber with several registered foresters, but I'm pretty much strictly 1 to 4 family residential now.
Okay. And 1 to 4, you mean like 1 to 4 units?
1 to 4 units, yep.
Okay.
Over 4 units gets more into the commercial sphere, mm-hmm. and you need a general certified appraiser to do those.
Okay. So there's a lot of different levels of licensing.
There's licensed, certified residential, certified general, and I'm certified residential in both Georgia and South Carolina.
Okay, excellent, excellent. And have you ever gone to other states for any of these things as well?
I have had temporary practice permits in Alabama and North Carolina, but that's been in the past when I was doing the land appraisals and for foresters and things like that.
Okay. And how long ago was that when you were doing all the timber?
Oh gosh, that's been probably 12 to 15 years ago.
Okay.
You find that after a while you just can't wear too many hats, and you got to specialize. And I just decided to specialize in the 1 to 4 family.
Okay. Okay. And Pierce, what we're going to do is we're going to give you a little question at the end of this, and it's going to be something on the lines of what you were most excited about with appraisals going into 2025 and again the CSRA. So think about that for me as we move along here. So, Pierce, I got 100 bajillion questions, and Abby, Grace, Grant, if y'all want to throw in some questions from the audience over here, we'd love to. As we roll, we're gonna we got a lot of brain picking to do. You ready?
I'm ready.
Excellent.
Hit me with them.
I love it. So first of all, thanks for coming on. I do appreciate it.
Sure, it's my pleasure.
It's been good. So we're really excited to get. There's going to be a lot of good insight and information, because I think there's a lot of people don't understand appraisals, right? Why is my home not appraised? Are different appraisers different? Is what is the you see all the time like an appraisal value versus maybe a market value. You see that. So tell me. Let's start with this. An appraisal. What are you looking at or with the residential property when you're appraising it? What are the things you're really looking at with that property?
So, just to go through the process, the first thing we do is an appraisal inspection or observation of the subject property. We'll come out and measure the house to see what the square footage is.
Okay.
We measure based on something called ANSI standards, the American National Standards Institute, and that pretty much standardizes the way that all appraisers measure and calculate square footage. And so we calculate both above grade and below grade. So you could have a house that the agent says is 3,000 square feet, but it could have 2,000 square feet above grade, which is classified as gross living area, and then you could have 1,000 square feet of finished area in the basement. So a lot of times when people see 3,000 square feet, they think that it's all above grade, and it's not. So we'll measure the house. We have a checklist that we go through to check for windows and exterior coverings, floor coverings, bath fixtures, and we also quantify the condition and quality of all of the features in the house.
Okay.
And then we will take photos of every room in the house. So if you have an appraisal, you're going to have all rooms open. I'm not looking at made beds or if there are dishes in the sink. That's not what I'm looking for. I'm looking at the overall quality and condition of the property. So after we do the initial inspection, we will go and we will try to find comparable sales in the neighborhood that have sold within the past 12 months, preferably within the last 6 months. And then we will verify those sales with public record, through MLS, through interior photos with MLS, and or conversations with the listing and or selling agent. And that is our verification process. So then we will make adjustments to the comparables to come up with a range of value. If I had my ability to just give a range instead of a single number, I would rather give a range, because houses are bought as much on emotion as they are on logic.
Correct.
So I would rather give a range, but we hope to get a tight range. Sometimes we don't. In a $400,000 property, it could be a $20,000 range from low to high.
And bank doesn't want a range.
They don't want a range. No. They want a single point number at a single point in time. And so we'll look and see which comparable is most similar, and we'll weight the comps 10%, 20%, 30%, 50%, and then come up, we don't average, but we come up with a range of value, and then we'll come up with a single point value. Okay.
So Pierce, let's role play. I'm a consumer, and I'm talking to you about my house. Okay. Pierce, I've got a pool in my backyard. Look at my finished basement underneath. Doesn't this raise my property value by like $100,000 over Tim McFlubbin's next door?
Well, and my answer to that is what appraisers love to say. It depends.
It depends.
It depends.
Okay.
It depends if the pool is gunite or,
Okay, so
or
that has
vinyl
value.
liner.
Okay.
Does it have a brick or stone coping?
Okay.
Does it have a lot of cool deck around it or just a small 6 or 7 foot area?
Real quick, I'm going to tell on myself. I don't know what brick coping is or cool deck.
Cool deck is the material that they typically put around pools. You would think it was concrete or patio.
Okay.
But it's like a different type material.
Oh, and if it's
then
good,
and then
okay.
the coping is the area around the edge of the pool.
Oh, yeah.
So it could have a bull nose on it. It could be tile. Mm-hmm. It could be stone.
Okay, but brick coping's considered the nicest?
Well, no, just the stone or tile is also all good.
Okay.
But the big thing these days, the diving rock.
The diving rock. Oh, that sounds like a
The
liability.
diving rocks can be $10,000 to $30,000, and they bring them in either on a pallet with forklifts,
Mm-hmm.
or I have seen a huge 2.5 ton diving rock.
Mm-hmm.
They take it over the top of the house with a crane.
Oh, that sounds expensive.
Very expensive.
Probably doesn't add that much value to your house.
It doesn't add that much value, but it's aesthetically it's pleasing, and they can say they have a diving rock.
Mm-hmm. Which kind of puts you in a tough spot because somebody looking for a diving rock at a house will probably be willing to pay a lot of money with that included.
Right, more than
house.
more than the typical person.
Correct. And if they're financing, though, the bank is not going to see it that way.
That's correct. But you know that pools have really added more value since the pandemic.
Really?
I'm going to say the contributory value of pools has increased by 50 to 60% over what they were 4 years ago.
Grant, that's a clip right there. Okay, tell me more about this.
So the people were staying home more. Mm-hmm. They were not using the neighborhood pools. The pool builders were in high demand, therefore they got a lot more money for the pools. They're still in high demand, and they're getting a lot more money for the pools. People are doing more and better things with their pools and making them more of a lifestyle feature for their home.
Okay.
So in my interviews and the verification process with with buyers and with listing agents and combined, we asked them the question, so what was your impetus to buy this house? Oh, it was the pool. Okay, well, it was the pool. Then what value did you give to the pool in the overall context? And that's how we come up with estimated values for other pools. We interview buyers and listing and selling agents.
Mm-hmm. I've been asked that once or twice. Okay,
So it's not actually cost driven.
Mm-hmm.
We try to make as many things as possible market driven.
Market driven. Okay. And you.
Right. So when you're selling a house and you have a buyer, at the end of the transaction, go back and ask your buyer, what kind of contributory value did you give to that pool, so that when Pierce calls you up after the sale to verify the information on the sale, I can say, Matt, what did your buyer say the contributory value of the pool was?
Like by contributory value, mean what was the how much was that pool worth to you?
Worth to you, yes.
Okay.
How much was
How
the
much
pool
were you
worth?
willing to pay for that home if that pool was not there?
Right.
Right. Okay. And that's something that I need to have as an agent, information, insight in with my buyer who bought the home, because when you're looking at the neighbor's home,
That's right.
you're going to be, okay.
But it
I
also
like it.
helps you on the next house that you sell that has a pool.
Mm-hmm.
It gives you a starting point on what to add. So you've got a house that's very similar in the subdivision, which in tract subdivisions there are. So you'll have a sale that has no pool.
Mm-hmm.
But you've got this one over here that you had 6 or 7 months ago that the buyer said the contributory value of the pool was $45,000 or $50,000 or $60,000.
Okay.
So you add that back to this house. Unless you had a diving rock, then you got to add another $10,000.
Got to add, Diving Rock adds $10,000 to your house on video right here. Maybe. It depends.
So that's how we come up with the adjustments. As many as we can, they're market driven.
Okay. Okay. So the pool is obviously, that's a big one. Kitchens And we do see some of, you don't see a ton of basements and those finished basements, but we have some, kitchens, bathrooms, and you're looking at, is it Formica? Is it a soapstone, granite, quartz, things like that? From a real estate perspective, I have a house that has a serviceable kitchen. Ripping that out and putting a brand new kitchen in, you're probably not going to get that market value back.
As far as cost, you're not going to get it back.
Correct, exactly.
The biggest reason you're not going to get it back?
Why is that?
Because 20% of the cost of that kitchen was demolition.
Oh, I like it. Okay.
You had demolition costs. Maybe not 20, but 10 to 20%. If you're going to do the whole kitchen, you got to rip everything out first. Mm-hmm. They don't do that for free.
No, they don't.
So you spend $60,000 on a new kitchen. 10 to 20% of that is mm-hmm. demolition and getting ready to go back mm-hmm. with the new kitchen.
Correct.
You're typically not going to get that back.
And that's from when you're walking through from an appraisal perspective. Is that the same approach as well?
Yes, but we will take say you've got a 3-year-old renovated kitchen.
Okay.
So we may do depreciated cost.
Okay.
So kitchens and baths are just like anything else. Over time, they depreciate, mm-hmm. whether they're functional or not, whether they physically can still be used or not. They become dated. And so after about 25 or 30 years, it's time to redo the kitchen and the baths.
Again.
You have something that works. You're ripping out something that works to bring something in that's more modern and market friendly.
Yep. Now, are there, this would be a good one, are there some materials, in your opinion, that are more depreciation resistant? Are there different, let's go to the whole house, anything, floors, kitchens, paints, etc. Are there anything that is more depreciation resistant? If that was a concern for me?
The least is paint and flooring.
Okay.
Unless it's a wood or stone or tile flooring. Okay. But then again, after 10 years, a certain tile goes out of style.
Mm-hmm.
Okay. Typical wood floors do not go out of style mm-hmm. unless they are engineered type wood floors. Mm-hmm. But real wood floors, pine, red oak, white oak, some of the exotic woods from South America, they typically don't depreciate as fast as mm-hmm. the manufactured type stuff.
I like it. Okay. So that's those are some of those more value-driven questions. So let's move on a little bit to the process, or I guess the regional itself. I'll give you a little case study here, and you know which one's coming up. I called you about this in North Augusta, probably like 6 months ago. So, you have these niche pockets. So people go and they have these lenders from out of town, and they have a bigger pool of these appraisers. And what I found was the appraisal for this particular house in this particular area. Yes, if you go out a mile or two in a big radius, you're going to find comps. But really, what I would consider the proper appraisal area for this home was about a quarter mile, 5 blocks up, 10 blocks down, a few blocks left or right. We're talking downtown North Augusta. Okay. When we're looking at, because and it's important to understand the listeners, we can't pick the appraiser.
No, you can't.
No, we can't. The bank picks the appraiser, but the bank really doesn't pick the appraiser either. They go out to their pool of appraisers.
Typically, they have an in-house pool, or they use an appraisal management company that has a pool that is approved by the lender.
Interesting. Okay. And that pool or that management company, that differs from lender to lender.
It differs from lender to lender, and they're supposed to choose an appraiser based on a rotational basis. Mm-hmm. Does that always happen? No.
Define rotational basis.
So if you have 5 appraisers, mm-hmm. they should go in a rotational basis. I should get every 5th appraisal that comes into that company for this area.
How does that? But so you're saying that doesn't happen? So
it doesn't happen all the time.
All the time. So, and why is that?
It may be that somebody has a favorite appraiser, mm-hmm. and they may get 40% of what comes through that AMC. It depends on what the lender tells them. Okay. The lender can tell them, okay, we've got a panel. We've got 5 appraisers. We want appraiser A to get 40% of the work.
Oh,
You can rotate through the others however you want, but appraiser A gets 40% of the work.
who are they telling this to?
The appraisal management company. The lender is telling the appraisal management company this.
Okay. Interesting. And that doesn't have any effect, or I guess
And
that
that's not
doesn't.
in all cases, but
Right.
I'm going to say in 75% of the appraisal management companies and lenders, that's the case.
Interesting. Okay, interesting. And what do you think, in your opinion, why might a lender want a specific appraiser to get 40% of these?
Fee, the appraisal fee is lower and the turn time is faster,
Okay.
which does not necessarily mean that the product that's produced is the best product.
Okay. Getting a little nitty gritty here. I like it. Some tea. Yeah. I don't know if that mic is hot.
It's the down and dirty.
It should be hot. It's the down and dirty. Okay. So this case, what happened in his, this house, this home had 60 people come through the open house. 60 at the price it was at. I don't think I've had 60 people come through all my open houses in my entire career.
I never had that many.
Right. And, so when I saw that, I'm advising my clients. That's what I tell them. I said, this house is hot. We need to be aggressive with our pricing. And, we just put a very good offer in and I think we delivered the offer and presented it as best as I could. And the buyer or the seller was in turn very, felt that we were just the best buyers for the home. We were going to be the most likely to close. But once again, and I had no question about the pricing of the home. That was the last of my concerns. Based on the evidence, I said, $399, dial it in, lock it up. That's easy. It's probably underpriced. I know this North Augusta area, North Augusta is one of the most golf cartable, walkable areas in the CSRA. You very rarely find a place in the CSRA where you can do all the things. Oh, let's not even forget about don't forget about the nicest single A baseball stadium in the country, right? The Riverwalk. You had the best side of the Riverwalk.
So you had 60 people look at it. Mm-hmm. How many offers did you get above the list price?
There's multiple offers. I can't tell you how many offers there were, but there's multiple offers.
Which was not unusual at that time.
Correct. Well, this was over the summer.
Okay.
So even more unusual.
Yes.
Yeah. Not many houses get a ton of offers like this. We didn't really go over list price. We didn't. We just presented the offer very well.
Right.
Right. And this appraiser comes down, and he's from North Columbia or something like that. Oh, yeah, that face, yeah. And he's using comps from Belvedere, from the Rapids, which is a nice neighborhood too. A lot of nice houses in Belvedere also. And then another comp from on the other side of I-20, off exit 1, all that Walnut and all that area. And of course, the appraisal comes down 20% or 20,000 underneath the asking price. Now, I feel like if that appraiser maybe had taken a drive through the area, he would have seen. But my ability to contact that appraiser is limited.
Right.
I can't really do a whole lot. We can put that reconsideration of value in.
But you do have an option.
What are our options?
So, when the initial contact is made by the appraiser, if you don't recognize the name, now you've been doing this long enough. You know most of the appraisers in the area. You've dealt with most of them. You know that's a name that you do not recognize. So if you're the selling agent and they're making the appointment with you, you call the listing agent and say, hey, I do not recognize the name of the appraiser. Do you know where they're from? Or you ask them when they call to make the appointment, or when they make the appointment on showing time, you send them a message. So I'm sorry I don't recognize your name. Just want to make sure, where are you from? And they say, well, we're from Columbia or Lexington County or whatever. So you get on your phone, you call the listing agent and say, I don't think that this appraiser is geographically competent to complete this appraisal. And we would prefer if you would call the lender and ask them to assign a local appraiser, we don't care who it is, that is geographically competent. 9 out of 10 times that lender will not buck you
Okay.
because they don't want to be accused of having an appraiser that's not geographically competent. So you do have an option.
But that's got to be caught before that appraiser comes out.
It does.
It does.
So that's just an option before he comes out.
So it's very important that the listing agent has their head on a swivel for that.
Right.
Because it can happen.
Because they can either make it by calling you and making an appointment, texting you, making an appointment, or making it through showing time.
Correct. Okay. So we have to keep our head on a swivel with that.
You do.
Yeah. And it was funny, very rarely in our industry when the appraisal comes in low, very rarely does the buyer.
Let me stop you right there. The worst thing you can
Say
do
low.
is tell an appraiser that his appraisal came in low.
Oh, yep.
That's the
I said the wrong
easiest
thing.
way to start off a conversation poorly.
It is.
It's less than the contract price because in the appraiser's mind, the appraisal is perfect. Mm-hmm. Okay? So less than the contract price, 5 words.
I knew that. I knew
You
I
did.
knew better. I knew better.
You've heard me say it before.
I knew it better. I knew better. You're right.
All right.
This is your opportunity to really
Continue
grill
on.
me. You can grill me right now.
There you go. Continue on. Well, let's talk about the ROV process.
ROV process. Tell me about that.
So the ROV process is a reconsideration of value.
Correct.
Now, that has changed recently as of October the 31st.
Okay.
All buyers will be given information when they meet with the lender discussing the borrower's opportunity to submit an ROV, a reconsideration of value, in the unlikely event that the appraisal comes in less than the contract price.
Okay.
It also gives them an opportunity to provide comparable sales, a maximum of 5, on a form that is designed by their lender or the appraisal management company, and they have specifically state why those sales are more comparable than the ones used in the original appraisal. There's also a place in there to say that the appraiser may have been biased. There are very few times when an appraiser is biased, but if the buyer thinks that the appraiser has been biased for one reason or another, then they can express their concerns about that.
Okay. And as a buyer, what should be if that's how you feel? What are some of those flags
Certain language, certain terms
in the appraisal itself?
in the appraisal itself.
Okay. What comes to mind?
I can't say because I don't use those words anymore.
Like the word low.
Within walking distance.
Okay.
Some people are physically challenged in walking. Mm-hmm. We cannot use that. We cannot use churches or places of worship anymore in our appraisals. Mm-hmm. We cannot use convenient.
Really? Convenience a word.
No, yeah, that's a banned word. It has to be within 0.5 miles or within 3 blocks.
Convenient. Why that's an interesting one. I haven't heard that before.
It may not be convenient for some as it's convenient to others.
Fair.
Any words that have different meanings, I haven't used them in several years, so they're out of my vocabulary now.
Yep. Okay.
But anyway, the ROV process, if the lender has to go in and have somebody in their office that looks at this and says, okay, there is some merit to the ROV. These 2 comparables are superior. We're going to submit this to the appraiser for reconsideration. Mm-hmm. The appraiser must make comments on all the comparables and any comments that are contained in the ROV. Mm-hmm. And that ROV becomes a part, ROV and the comments and questions become a part of the appraisal that is submitted to the lender. Mm-hmm. Now, if the lender does not agree, or if they think the appraisal is still less than the contract price, they can order another appraisal.
They can. Okay. So they're able to.
But there's a caveat. If they order a second appraisal, then they must accept that appraisal value.
You get one shot at a second chance.
Right.
Okay.
Now, if they order a second appraisal, if they use that, then they are required by Fannie Mae, Freddie Mac, FHA to submit both of those appraisals to the state for review. So they better make sure.
The government's getting involved now.
Too much. They better make sure that they really need a second appraisal before they order one. Because number one, what if that second appraisal comes in less than the first? And then they have to submit the appraisals to the state for review. Not just the first one, but both of them. Okay.
Now, who's reviewing this at the state level?
The state Real Estate Appraisers Board has, I think, 2 investigators.
Okay.
They need at least 2 more.
Okay.
Because Fannie and Freddie have started doing what they call tips. If they find something wrong with an appraisal, they will send it to the state themselves. Now, it's not that often, but it's becoming a little more prevalent than it was in the past 4 or 5 years.
Okay. And real quick, all of this sounds, some people listening may say, this is ridiculous, right? This is how ridiculous, right?
But it's what we have to deal with on a daily basis.
But your local lender, your Rocket Mortgage, if you want to use one of the bigger box lenders, they are doing all of this. Why?
Because they want to make every loan.
Right.
Because they're all commission based, which I have nothing wrong. I don't think there's anything wrong with being commission based. I would rather have a loan officer that was commission based than a loan officer that was salary based.
Why is that?
Salary based guys typically not going to call you back on Sunday afternoon.
No.
But we all know local loan officers that will call you back on Sunday afternoon, even if they're on the golf course. And you need a question answered on one of your loans that's supposed to close on Monday or Tuesday.
Just please don't call them in the middle of that eagle putt.
No. But I mean, we all know people like that. We deal with them. Yep. And so I encourage agents to use a local lender with local processing and local underwriters.
Correct.
So I think you get better service than with somebody in Michigan or in Ann Arbor or in Dallas or in Utah or California.
I love it. But they're all basically these loans that you're purchasing as a consumer. They're taking these loans and they're going to most time they're going to sell them off to Freddie Mae, Fannie Mac.
Yep.
And they got to check all those boxes.
They've got to check the boxes.
And that's why all of this is in place by this process. And this is going to segue us to our next piece here. This is all a result of the big financial crisis 2008, and you worked through that very hard.
It was difficult.
It was difficult,
but we were busy because we appraise them on the front end for the sale.
Okay,
but we also appraise them on the back end for the foreclosure.
Interesting. So you're going to houses twice, a lot of times.
Sometimes multiple times in the foreclosure process because it's become more and more difficult to complete the foreclosure process. So I may appraise the same house for foreclosure 2 and 3 times over a 4-year period.
Tell me about that process. I want to hear about what it was like. That was one of my biggest weaknesses. I know some data. I don't know what real estate was truly like because I didn't go through it. So tell everybody here, let's just talk about it. What was that market like? From an appraisal standpoint, how were your processes?
So in 2010, values in this area, in the Augusta metropolitan statistical area, Richmond, Columbia, Burke, Edgefield, Aiken, McDuffie, Warren counties, were declining at a rate of 1% per month.
So 12% per year.
12%. January 1 to December 31, 2010, if you bought a house January 1, it was worth 12% less. Now, that sounds like a lot. If you were in Atlanta, it was worth 20 to 22% less over that same time period. So as you and I have discussed before, Atlanta tends to be higher when prices are going up as a percentage, but they tend to be lower, drop faster as a percentage versus what the Augusta MSA is. So let's just say right now, the Augusta MSA, based on...
What does MSA stand for?
Metropolitan Statistical Area.
Okay.
Kind of hard to get that out sometimes.
all right.
That's about 7 counties in this area. So the Augusta MSA right now, based on the federal, HPI, the Home Price Index for the Federal Finance Housing Administration, is about 1.96% year over year.
Okay.
For the Atlanta metro area, it's about 5.3% year over year. So we're still increasing in many areas of the Augusta MSA, but we're not increasing as fast as those in the Atlanta MSA. And here recently, that increase maybe 2% over the last 12 months, but that increase has declined over the last, say, 3 to 4 months.
Okay. It's declined here over the last 3 to 4 months.
Well, it's declined in Atlanta as well.
Decline. Okay. And what's the what do you think is the big reason for that?
You would think that it would be due to the lack of inventory. I mean, too much inventory. But we actually have a lack of inventory.
Yep.
Our inventory now is less than it was 12 months ago.
Specifically, it's a lot less than it was 2 months ago.
It's about only 60% of what it was in March of 2019. So you would think that because of the lack of inventory, there would be a higher demand for those houses that are on the market and values would be increasing more, but we're not seeing that.
Right.
And we don't know what effect the damage from the hurricane Helene back in September is going to have on our market. We don't have enough exposure and enough sales to say, oh, well, the market's declined 2% or 3%, or that it's gone up 2 or 3%, because a lot of people took their houses off the market
Yep.
due to the damage to get it back in marketable condition. So I think that's partially why we have a lack of inventory over the last 2 months.
Yep.
That's for existing homes. Now, new homes, we still have a good inventory. We've still got probably 65 to 75 days of inventory on the ground, completed or under construction.
Yep. And so, to the person who, there's always going to be that person. The person that is very fearful of a new year, new financial crisis that's going to eradicate or devastate the housing market, and they're going to buy tomorrow, and all of a sudden the market's going to tank. We have those. What would you say to someone like that who approached you with that concern?
I would say go ahead and buy.
Okay.
I don't see any indicators like we had in 2005, 6, 7, and 8. No doc, low doc loans. The only difficulty I can see right now is that Fannie, Freddie, and FHA just the other day has said they're going to increase the allowance of appraisal waivers.
Okay.
Where no appraisal is required on loan to value up to 90%.
Okay. So 10%,
10% down, no appraisal. They may do an AVM, automated valuation model, but up to 97% with a property data inspection.
Okay, and the property data inspection is a
whole nother can of worms.
How much time we got? Not much. That's okay.
A property data inspection is what's done by an unlicensed, unsupervised, untrained person.
Okay.
In most cases, what they do is
Sounds like an intern.
Yeah, a high school basketball coach.
Okay.
An insurance agent.
Okay.
In some cases, a real estate agent.
Ooh.
In
we don't
my
want them
case,
appraising anything.
So in my case, I have a trainee appraiser that is almost licensed, and he's been working with me for 18 months. He's doing these property data inspections. Now, he's not licensed. He's not insured, but he works for me, and I would think that a real estate agent would want him to come into their listing before they would want the high school basketball coach. Not saying it's bad to be a high school basketball coach.
Nope.
But they have no training, they have no insurance, they have no licensing, and they have no supervision.
They wouldn't want me coaching that basketball team.
No. So we're advising, we're advising agents that if you get a call from a property data inspector saying that I need to do a property data inspection, or need to view your listing for the sale, and you do not recognize that name as an appraiser, ask them if they are an appraiser. And if they're not, then my advice is do not allow the property data inspector to request that the lender get an appraisal.
You mentioned a second ago about increasing an allowance of these. So I guess the lender has a certain amount of properties they can defer this to based on whatever, I guess, what they feel.
It's not an allotment. It's a collateral underwriter program that takes all the information about the borrower, credit score, money in the bank, 401k, job history, I think I said credit score, and then they look at the property. They may do an automated valuation model, which is a computer analysis. What could go wrong with Zillow, right?
Right.
Zillow only lost about $4 or $5 billion using their own automated valuation model.
Yep.
So what could go wrong in this process using an AVM? So they'll do an AVM, and if it approximates what the contract price is, then they will waive the appraisal. But they may get a property data inspection. They may get, on the 97%, they may get a property data inspection and what they call a hybrid desktop appraisal.
I've heard about those. Yep.
So the hybrid is where the property data inspector goes out, and they use something called LIDAR, LIDAR, say like a sonar feature on their cell phone, and it will draw the house using photos of the house on their camera, and it may be within 10% of the square footage on the house. It's not exact. It's not the ANSI standards, but they'll measure it that way. They'll input all the information into a data sheet. Then it's submitted to an appraiser that's sitting at their desk, hopefully that's familiar with the area, and they will complete a desktop appraisal. So I reviewed one the other day in this area in Columbia County, in Evans. The property data inspector came from Athens. They are a high school basketball coach.
Oh, this is a clip.
And the appraisal was completed by an appraiser in Gwinnett County.
I would be very concerned if I was that property owner.
You think?
Yeah, very concerned. Absolutely.
So we did the review on it for the seller and the selling agent. Came up with a lot of things that were wrong. The main thing being that the appraiser that completed the bifurcated or hybrid appraisal was not geographically competent. Still don't know to this day how they got access to the Realtors of Greater Augusta MLS.
Because they'd have to buy.
They have to be a member.
Yeah.
Or else somebody helped them out. So,
which camera do I look at for
which is a violation.
That's a violation. Why are some lenders electing to go to that process?
They think that it saves time, but it takes about the same amount of time. They think that it's going to save the borrower some money.
Okay.
This is the largest expenditure most people will make in their lifetime. Does it really matter to them that they're saving $100 from a full appraisal versus a hybrid appraisal and a property data inspection?
Some, but not most.
Not most.
Not most.
And most agents don't want an unlicensed person in their house.
Yeah, it's a liability.
They have no recourse.
Heck, I don't like most licensed people in my house either.
Unless they're a plumber or
you
electrician.
can come to my house. That might be a violation too. I don't know. We'll find.
Oh, we can do that.
Have you up for dinner? Pierce, I appreciate it. Thank you so much. We've had some really good stuff on here. Might need to bring you on for a part 2, honestly.
We can do that.
We do.
I have lots of more good information.
Oh, I know you do. And we'll, if you're listening and you're curious, call me, call Pierce. We'll have a little powwow and we'll get that information to you. It's a big bonus of our little network we've been building for many, many years. So Pierce, I'm gonna get you out in this last question here. Appraisals going into 2025, 2026. What are you most excited about? What are you concerned with? And what do you think some of the biggest things we'll see that will impact our consumers?
I hope that we're going to see at least a slight decline in rates.
Okay.
I don't see a big decline coming because there's so much demand for money. Even if the Fed lowers the Fed funds rate, the 10-year sets the 30-year mortgage market. I'm hoping that we're going to see a slight decline in rates, which will stimulate some activity. I'm hoping we're going to get some more inventory on the market that will provide more inventory for you as an agent and more cases for me as an appraiser. I'm hoping that we see some decrease in regulations in our area as far as zoning and requirements for the county from the counties. I think that they're a little behind the curve.
On the regulations.
I think they're behind the curve on regulations. Some other parts of the country are accepting smaller lots and smaller houses. We have a severe shortage of inventory of new construction of entry-level homes.
We do.
Be it attached or detached type properties.
If you know me, you know how I feel about that.
So I'm hoping, based on what I hear from other areas and from things that I see on a national level, that we are going to have additional inventory to sell, which gives me more cases. I hear good things from NAR, National Association of Realtors. I'm on the National Association of Realtors Real Property Valuation Committee. I was on it in 24. I've been reappointed for 25.
Congratulations.
Thank you. Our committee works along with the conventional financing and government financing committees to help with appraisal issues. And we're seeing a push not towards less regulation, but more comprehensive, understandable, repeatable regulation, which will put more people in homes. So I'm optimistic about 25. 26, I don't know. You can only hope that rates will continue to decline and we'll see more inventory in the area.
I like it. So temper our expectations on rates going forward, but hopefully we see some decent some drops. We're really hoping for more affordable new construction.
Yes.
Entry-level construction, and maybe an easier purchase and sale process that comes to the appraisal.
Yep.
Appraisal process. I like it. And maybe get rid of some of these AVM automatic valuation models.
Exactly.
Get rid of those. I don't like that. That leaves an icky taste in my mouth. Pierce, I appreciate it. If one of our listeners has a question or comment and they want to reach you, what's the best way to do that?
The best way is to email me.
Okay.
Pierce at blitchappraisal.com.
Pierce at blitchappraisal.com. Perfect. And you handle mostly 1 to 4 primary residential?
Single family up to 4-unit rental properties. And in my main counties are Richmond, Columbia, Aiken, and Edgefield. But I do go to McDuffie, Warren, Lincoln, and Burke counties.
Maybe have a deer stand out there ready for you if they send you all the way out there.
In Burke County.
In Burke County.
Yes, this time of year, I will accept all cases in Burke County.
I love it. Pierce, thank you so much. I appreciate it.
My pleasure.
Thank you.